Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news of more evidence economic momentum in 2020 is hard to find. In the US, the Chicago Fed's National Activity Index is pointing to slower growth in December. The slowing American economy is still requiring Fed support. To start the week, they were back with $50 billion in overnight repo activity. It is now a regular activity that markets are assuming replaces the more usual QE policy. The American residential real estate market activity picked up a little in December, with sales volumes up 3.6% in the month from the same month in November. But year on year, there was a zero gain, even if it is near a two-year high. Median prices, however, were up 7.8% on that annual basis. And the Bank of Canada had a rate review overnight and kept its policy rate at 1.75%. But they downgraded their growth forecast for 2019, and that weakness is expected to spill over into 2020, and they now expect only 1.6% growth this year. And the Canadian Consumer Prices Index rose 2.2% in December, the same annual rate of increase it posted in November. A year ago, that CPI rise was 1.8%. And later in yesterday's equity trading sessions, Asian markets got much more positive, rising from the start of sharp declines to post significant gains. It was an impressive turnaround. Shanghai started off down 1.2% but ended up 0.3%. Hong Kong started off flat and ended up 1.3%, and Tokyo started lower and ended up 0.7%. But none of that carried on into European markets, and they were all about 0.5% lower overnight. Wall Street has split the difference and is currently flat in early trade, with the S&P 500 up just a whisker. Japanese department store sales were down 5% year on year in December, but at least that was better than the 6% drop in November. And it's not only the US Fed that is pumping in economic support liquidity. Chinese local governments have announced more than 800 billion yuan of bond issuance in January, more than double the amount of the same period last year, and the third highest one-month issuance since 2018. In Australia, consumer sentiment, as measured by Westpac's and Melbourne Institute's index, is down sharply again. It is now near GFC lows. It is a similar result to the weekly ANZ Roy Morgan index. By any measure, Australian confidence is on the skids, and the bushfire situation isn't helping. In fact, it was enough for one large retailer to pull out of Australia even before it officially opened its doors, and after investing about $500 million. US Treasury 10-year yield is a little softer today at just under 1.77%. Gold is unchanged at $1,577 an ounce. And US oil prices are down sharply today at just under $57 a barrel, while the Brent benchmark is lower to just on $63 a barrel. And the Kiwi dollar is softer today at 65.9 US cents. On the cross rates, we're unchanged at 96.4 Australian cents, and against the euro, we're marginally lower at 59.4 euro cents. That puts our trade-weighted index down to 71.1, and that's a one-month low. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.